How would you feel after locking in a 15% losing trade? If you're human, probably despondent, perhaps embarrassed, maybe angry or frustrated, revengeful at the market. Today I'm going to show you the last closed trade that I did in FCX Freeport-McMoRan Inc. in this US real money portfolio that I've traded since January 1, 2016. And yes, it was a 15% loser, 15.54% to be precise. Despite this loss, I'll prove to you that FCX has been a brilliant contributor to this real money stocks portfolio. However, to me that's no surprise whatsoever, because I always knew there was a very high probability it would be. Not a guarantee, just a very high probability. How did I know that? Well, the answer to that question is the same as to why I don't get despondent and frustrated after a 15% loss trade, or euphoric after a huge 100% plus winning trade. You see, when you trade the stock market with a system that has an edge with a high enough expectancy, you start thinking in terms of the probabilities of your edge with each new trade, rather than nervously entering each new position with trepidation and a feeling in your gut of stepping off a cliff into the unknown. Allow me to explain. Unfortunately, for some viewers, I have to go to the numbers. If numbers aren't your thing, then the stock market, or any investing for that matter, won't be your thing. Even if you hand your money over to a third party, you have to know the numbers to know whether you're being ripped off or whether your money is growing at a high enough rate. Onto the trade. At the time that undebatable objective entry signal occurred for the FCX trade I'm about to show you, FCX's probabilities were a 44.4% chance of having a winning trade that could, on average, be 3.6 times larger than if it turned out to be a loss trade, and its potential hold period could average around 17.8 weeks, 125 divided by 7. Now I know that it will be difficult for the untrained eye to compute these numbers, but if you want to be successful with trading the markets, this is the way you have to start thinking, in probabilities. You see, there's no certainty at the individual trade level, and averages provide no solace in the now moment when you're about to click the buy button to open a new position. Because in any given moment in the market, anything can happen, which is Mark Douglas's first fundamental truth about trading. One of the tenets and truths you have to come to completely believe in to be successful in this caper over the long run. Really believing anything can happen at the core of who you are puts you in a neutral state of mind. You have no expectations of the future based on a negative mindset associated with a bad past outcome or experience. Combine that with probabilistic thinking and you don't feel despondent and frustrated about one or a few lost trades you've just closed. Rather than thinking in samples of one, such as people do with recency bias and what happened in their last trade, you have to think in terms of distributions over large samples, where you fully accept and are comfortable with not knowing what will happen in the next trade that you take. As Mark Douglas states in his third fundamental truth, there's a random distribution between wins and losses for any given set of variables that define an edge. That's where you can find a high degree of certainty, in a distribution of a large sample of events, but on one condition, that your buy and sell decision making has a known edge before you start trading. And you can only know you have an edge if you use a rules-based mechanical system, because you cannot accurately calculate whether an inconsistent buy and sell decision making regime with loose and on-the-fly criteria has an edge or not. I do know that I have an edge with a sufficient expectancy, which is why I felt at peace when I closed this 15% loss trade with my rules-based exit signal. Let's go back to the beginning of the FCX trade. Starting at top left of the chart, you can see the previous exit, which saved me being in a trade in a 39% fall from the date after the exit signal to the trough 11 weeks later on July 14, 2022. FCX's price then started a gentle uptrend before breaking above our proprietary algorithm's signal line to alert a buy signal on August 25, 2022 to open a trade on August 26. However, all positions were filled in the portfolio on that day, so the trade was not entered on August 26. Then a day later, an exit signal occurred for each of NVIDIA and AMD advanced micro devices, vacating 2 positions in the portfolio and, according to the rules of the portfolio's investment plan, allowed a position to be opened in FCX on August 30, 2022. 4 red bars followed after the day of entry before FCX's price began to recover. Getting sucked into daily price movement would drive the unlearned dotty, as they watched FCX's price drop nearly 10% straight after buying and then rise 14% over the next 3 trading days. Neutral mindset, rules-based investors don't get sucked into daily price movement with their open positions, as they simply let their edge play itself out in the market over a large sample of trades. Having in place unambiguous technical analysis criteria to alert you when to sell is so liberating and time-saving. FCX's price fell sharply thereafter, generating an exit signal on September 23 to exit the following trading day on Monday, September 26, 2022. Every closed loss trade is a victory against a larger loss trade, and trying to guess and hope that a loss trade will recover to reduce your loss or get back to break even is pure folly. Amateurish thinking like this will only set you up for having multiple large losing trades, which decimate portfolios and decision-making confidence. But worse still, guessing and hoping makes your decision-making inconsistent and random, and will train you to break your process, which can only produce inconsistent and random results. Learning to faultlessly and unemotionally close your loss trades with an unambiguous rules-based exit signal is one of the biggest leaps of progress any trader can make. This is the record of that trade in the Portfolio Manager's Closed Trade Report. These are all the FCX trades completed in this live traded portfolio since 2016. I said earlier that FCX was a great contributor to this portfolio and still can be in the future. Over 6 3/4 years, it contributed $20,840 in profits with a win rate of 36.3% and a payoff ratio of 3.1, giving a decently positive expectancy of 0.49 after costs. The largest win was 241% and the largest loss was 23.7%. Bigger and sharper trends are to be expected from a stock with higher volatility price movement. Being a trend-following algorithm, a long right tail is to be expected as profit trades are allowed to run their course and loss trades are cut short. Over the months and years to come, we'll keep publishing learning like this from real-life trading experiences with using our unique mechanical algorithm. To stay connected here on YouTube, please subscribe and click the bell. Please read our regulatory disclaimer in the description below. Until next time, when I look forward to showing you through the real money portfolio again, I wish you consistent and objective investing.